Mark the Meerkat Suffering here, free online trading education.com, brought to you by Grok Trade, where I'm an analyst, host to the GrokStar Trading Room, and perhaps your future mentor. Let's take a look at a trade that we had in the GrokStar Room this morning. It was on Qualcomm, QCOM. Here it was after opening. It was doing what we call a bear pullback. So let's go ahead and take a look at what a bear pullback is at freeonlinetradingeducation.com. Right here to our chart school. Go down to chart patterns. We want a bear pullback right there. Takes us to the page, and it is running down, and it comes back up, hits a line of resistance, and starts to fall again. This is a bearish formation. Here's a written description of it, and even a place for you to print it off and study this. In all of our chart school patterns, we have that. And then here's a couple of real-life ones where it ran down, pulled up, started to run down again on this one. Same thing over here. And now we're going to show you another one here on a day trade. So let's take a look here again back at Qualcomm. So here it is at opening. It hit its hit on the 200 period moving average and then fell down here. And now we're going to set a trade right down here and let the market come to us. We're not chasing the market. We'll let it come down, and if it ends up going to the upside, we won't be in it, will we? And then bam, there it goes. It did fall down, and I'm in short at 71.09 on QCOM, Qualcomm. Then look at that, falling down, falling down. This is good. This is good. It's still falling here, facing. Now, this was right after opening here at about 9:38 market time, and just watch this one here. And then it did come right back up and hit its head right where my entry was, and this 20 moving average falling down. So I had about a 1% stop up here, and then it started to fall again. So I'm bringing my stop to break even here, and let's see what happened next. It continued to fall, and I'm going to kind of fast forward this one, because this ended up being a very long patience trade. Once it pierced the 20 moving average here once and started to fall again, now I'm using the 20 moving average to place my stop just above that, and look at that, it tagged it here, tagged it there. If it didn't break it, my stop is just above it, and let's keep going, and it's down here now. It's falling, and it keeps all the way down to here. So now I'm going to use a 50 moving average here as my stop. And now it's approaching the closing line, so it has completely filled the gap, ladies and gentlemen, completely. There was an up gap, about 3%, and it just fell. Look at that. This line right here, that's the closing line, and it was sitting here, stalled right at it. So I went ahead and I took out half at $69.10 for 2.7% on the first half. Then I set my stop on the second half just above this 50 moving average here, and let's see, let our winners run here, right? And it just was stalled there for the longest time, and stalled, and then it dropped back down here to the closing line again. I'm bringing my stop down to here, and then it was just sitting there, and it's now lunchtime, and it's getting time for us in the GrokStar room to stop trading. We only trade in the mornings. So I went ahead and I set a trade here, and I got out the second half at $69.16, also for 2.7%. So let's take a look at this overall trade here. On this, well, I have to pull it down so we can even see it here, right? On this bear pullback here, I got short and then just managed my stop all the way down. And for this total trade here was for 2.7% in 2 hours and 28 minutes. Ooh-ah, that's letting your winners run, just managing your stop and getting the best you can out of it. Mark the Meerkat Suffering. Trade well.